Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a portfolio analysis or review of my $30,913.48 stock portfolio. Now, we have my Chase account, which is what I'm going to be going through first, where I have the majority of my holdings. I have a little bit of other money that's just gains from my old brokerage and my Weeble account, but most of the time I just go through the Chase account stuff and kind of talk about that and how that's doing. So without further ado, the Chase account is currently valued at $22,610.34. Currently has an unrealized gain of $533.43, and it currently earns me $623.71 in annual dividends. If we go from the bottom portion of these holdings to the top, I'm going to kind of just briefly talk about each one and how I feel about it right now and what my long-term plan is for it. So going from bottom to top, we have Texas Roadhouse, ticker symbol TXRH. Current shares are valued at $192.92. The overall value of my position is $681.90 if I wanted to sell. That means that I am up $79.51 on this holding because my cost was $602.39, and that doesn't include the dividend it paid me of $2.39. So up a decent bit on Texas Roadhouse. I think it might be honestly a good time to get in still, just because I think that the whole market's going to go a little bit crazy just overall. And I don't know if we're really going to get those lows again. I think it's more likely we're going to see higher highs out of Texas Roadhouse. And I think this is going to be one of those stocks that I really am going to look back on and regret that I didn't buy more when it was much lower. But I'm going to also really regret not buying in while it's, still under 200 when it's not at all-time highs yet. So I really think that Texas Roadhouse is going to have continued growth just because of the amount of franchises that they have, just the amount of sheer number of restaurants that they're going to continue to be able to put up that are going to be paying fees to corporate and really just driving higher cash flow. So I really think that there's a lot of growth ahead, and I think that eventually this is going to pay a pretty hefty dividend. Next up, we have a new stock that I've added to my portfolio, Hasbro, ticker symbol HAS. I put about $1,000 in. I'm up 2.62% on it, or $26.26. The overall value of the position is $1,027.62. So to get this Hasbro share, I actually sold one share of Meta that I bought right at the crash, right at 484. I bought one share, and then I sold a share a couple days ago for $650. And I said I wanted to invest in something else, so I pulled $350 more, and I bought a share of Hasbro with that. And I think that Hasbro is going to continue to outperform. Sorry, when I'm saying one share of Hasbro, I mean $1,000 worth. But I just didn't want to have the volatility that I had in Meta, that I was kind of seeing where it could go up and down, really just whipsawing, and I kind of did want to secure some profits. We'll see if that was a mistake or not, but so far it looks pretty good from Hasbro in that perspective, just because I think that Magic the Gathering is really going to be much more valuable than it is now going into the future, and I think that Hasbro really could capitalize on something amazing here. Next up, we have Meta, ticker symbol Meta. Currently trades for $640.34 a share. Current value of my position is $1,281.76. And currently, as of recording, I'm up 14.46% on that, or $161.95. I also have some realized gains, as you know, from selling one of my shares. I believe it's around 65.70. I'd have to check, but I think I sold at a 9% gain for that one share. And yeah, created the Hasbro position with a little bit more cash from my other account. I still think Meta is going to gain in value. I just don't really want to ride the volatility roller coaster, and I kind of want to have a new position set up and something entirely different that I think is going to become more valuable as well. So I kind of think both of these ideas are good ideas. Um, but I really wanted to have both of them because they both have potential big downsides. So I kind of want to just have the risk as different things, if that makes sense. Like, I don't want to put, I think they're of equal risk, but the risks aren't related, if that makes sense. So it could be, I think these could go either way, and it's completely out of my hands in a lot of cases. I think that the broader economies can affect these, but both in different ways. So that's kind of why I want the same value amount of each, or very close to the same value amount of each, as the same size positions, because I think Hasbro is very interesting, just as Meta is extremely interesting. Next up, I have Prologis, ticker symbol PLD. Currently valued at $110.55 a share. Current value of the position is $1,595.41. Currently up 6.08% or $91.48. Now, Prologis is a triple net real estate investment trust, meaning that they do not have to pay any of the costs that the person renting their warehouse space is paying for, including property taxes, including maintenance, including anything that has to do with the building. They're more just there to collect their rent and let these guys do whatever they need to with that warehouse space as long as they're paying them. And so Prologis rakes in money. It's pretty volatile. It jumps around. I try to buy it below 100. Has a pretty good dividend. I'm obviously up on it. I think that this could be a good pickup here still, but man, it was like a week ago that it was at like 99. And it just felt like so obviously undervalued. Because I think like a fair value at the bottom of my range would maybe be 105, 110. Somewhere in there, I think is like fair value. Maybe like, oh gosh, I don't know. Even 105 seems very low for this kind of dividend yield and the kind of quality. But I was picking it up for under 100 because nobody wanted to touch this. It's been really weird how Prologis has been trading with such highs and such lows. But I've been getting in on the lows and just holding because the dividend's good. And I think that I want to hold it for the long term because I think it's really going to pay a lot of money. But I'm telling you guys, it's not as good of a time as last week. But I think that these are going to be the prices now. And I want to see if I'm wrong. If things go down more, obviously, I think it would be a good idea to get in if you don't have exposure. Again, this isn't financial advice. I'm not a financial advisor. But I think everything really is, you're not getting the bottom, obviously. But I don't think we're going back to the lows. I think that we're past the point of the bottom. And once we have any kind of momentum up, I think people are going to have fear of missing out. And eventually people are going to get more comfortable putting more money in tech. I think that the tariff stuff's going to kind of go away. And we're going to get stocks running back up again. I think that's what's going to happen more likely than a bear market. And I'm not trying to predict it. I'm just saying that I think there are decent deals because we're not at all-time highs right now. And I think that it's more likely that a lot of the tech companies I'm in are going to be more valuable in the future. So even though they've gone up so much from where I was buying at the bottom, I still think it would be a smart idea to maybe get a little bit more Salesforce or a little bit more Amazon, because I think Amazon will eventually hit its all-time high again at some point. I think it's very likely that'll happen. And I was adding it up. I think I'd make like $500 off of that if I wanted to sell out. But I think it's going to keep going past all-time highs. I really think that's going to happen in the future. I think that we're going to get out of all of this fear, and people are just going to want to roll back into tech. But I don't know. It could go lower too. There could be a lot more selling. I think that people were very optimistic, more optimistic than they probably should have been. And I think that there are a lot of risks baked into this market. But I really think that the Trump administration kind of learned their lesson on tariffs. I think that they have seen that how the stock market feels about it, and they're rolling it back. And I think everything's going to be more expensive. Sorry to kind of go off on that tangent, but I just think it makes sense. I just really think it does make sense that everything's, I really think that's the way it's going to go. I think it's going to go to a total bull market. I don't know when. It could be years, but I think that we're not going to go back down to where we were. That's just kind of my gut feeling, and I want this to just be documented because I could be totally wrong, but it's just kind of my gut feeling right now. So I don't think I should really be selling anything else, to tell you the truth. But all that rambling as well to come back and talk about waste management, which I also have $1,600 worth about. I'm up 10.01%. And I think that this is a great business that you can buy into pretty much any economy. It's going to do well in the long term. It's going to be your friend for times like this when everyone's freaking out. If you need the money, this is one of the best stocks to put your money in to get reliable gains year over year, continued growth, continued organic and merger and acquisition growth, more efficient just in how they do things. Very, very interesting business, necessary business, and overall just able to grow consistently no matter what because people aren't canceling their garbage. So I think it's a really good business, but I think it's a little bit expensive right here. I did pick up one share this week for $220, so I feel like I got a pretty good deal on it. If I had to pay $230 and I wanted to own Waste Management for the next 5 to 10 years, I think it's still going to go up, but I definitely think it's more, you're paying a premium for it for the amount of growth you're going to get, but you're very likely going to actually get it. Next up, we have Energy Transfer. This is actually the biggest position in the portfolio overall. Energy Transfer is just basically a company that charges a toll to move natural gas. They also own a lot of different renewable energy sources and a bunch of different energy kind of solutions, I guess would be the right word. They pay a very high dividend, and in my Weeble account, they pay me about $108.80 4 times a year, and I just collect that cash. Now, in this account, I think they pay $33.33 a quarter, so that should average out to about $141 a quarter that I'm getting from this company, something like that. 33 plus 108.8. Yeah, 142. Okay. So I'm getting about 142 in dividends. Sorry for that interruption. 142 in dividends from Energy Transfer just overall as a company 4 times a year. So that comes out to about $567 that they pay me a year just to breathe air and talk on YouTube and do this channel. So thank you, Energy Transfer. I think that they're going to be able to continue to grow because there's a lot of energy demand that's coming, and Energy Transfer is going to be able to fill that void very well. They're currently down 6.43%. I think if you get in below 20, I think that's a good target for me. I just have a lot of it. I have about 1,800 plus about 5,900. So I have about 7,700 worth. And I think it's a great business. And it just pays me a lot of money every year just to hold it. So happy to hold it. I don't really think about it. I just hold through and collect my dividend. Next up, I have American Express, ticker symbol AXP. Current value on these shares are $299.72. Current overall value of the position is $2,110.50, up 10.29%. And this is a very reliable business that as long as we're not in a dire recession or something like that where the economy just completely tanks like a 2008, this business is going to continue to earn a lot of money and continue to grow and continue to be able to expand its services, and it's intertwined with other businesses that are growing as well and doing more transactions. And as there's more transactions through their systems, they make more money, and their systems continue to grow just by the way that they're engineered. So I think American Express is really a wonderful business that is going to continue to grow. I was buying this. My rule was every time it went below 300, I remember holding it up to 334 when I had bought for 292, and I felt like such a genius. And then it tanked down from 330 all the way to 230. I think it's coming back to that 330, maybe even 350 level eventually. I think that it's going to grow. I think that if people lose all their doubt and we're able to grow kind of unrestricted like Trump 1.0, if we could get back to that, the American Express is going to be worth so much more. It's going to be insane. And I think everything's getting ready to run. Next stock on my list is Amazon, ticker symbol AMZN. I'm up 1.15%, but I have been down every single week on this stock. Just been holding it, buying more as it dropped, but I just can't believe where this stock is. I mean, it's really unbelievable. When you have, Microsoft that has come back so much, and I do own some Microsoft in the Weeble account. It's kind of interesting. But I've thought that Amazon was always the better version in a lot of ways. I think they're very similar companies, but I really thought that Amazon was the superior kind of version to Microsoft. I guess they're still going, so we could still see what percentage, which one's doing better. But it seems like Microsoft's ahead, and I'm very surprised by that, because I would think that the value of what Amazon has created would be greater with all the potential growth that they have in a lot of their other things. Because I just think that the logistical network that they have is fundamentally more valuable than a lot of the software that Microsoft has. I understand they have Xbox, they have everything else. I mean, it's just, I could get into it in a whole other video of me just rambling about the Amazon Microsoft comparisons that I'm kind of seeing, but I don't want to bore you guys to death. All I have to say is I'm just very, very surprised that Amazon's trading where it is. It seems like it's undervalued. It seems like out of all of these, this and Salesforce are the most undervalued, but I feel more sure about Amazon just because of the power, like the amount it was worth before. I really feel like this might be what I need to buy more of and kind of just hoard more shares right here, because I think people are going to come around and realize that Amazon has continued to be able to grow. And I think that it's going to have a lot more volatility up than a lot of other stocks because it has so much room to run compared to where it was. And then, I mean, they kind of always say that their expectations are going to be on the lower end. I know they always hit the top of their own expectations, and that's kind of why Amazon dropped post earnings, if you guys didn't know. But I really feel that Wall Street is being very short-sighted, and I think that Amazon is going to be worth a lot of money going forward. Next up, we have Salesforce, ticker symbol CRM. I have $3,496.50 worth, currently down $182.20 or 4.95%. And Salesforce is very interesting to me because I feel like it could be the next almost derivative of Microsoft. Like, its software could get to a point where it's $1 trillion value software for businesses. Their customer relations management software really is top notch. They basically make it so that once you get into Salesforce, you really can't get out. So they have pretty much the same numbers over time, but they reinvest money to make the product better. So as existing companies grow and as new people come in, they're able to make more money. And when they make more money, they improve the product, which brings more people in. So it's kind of a self-feeding network effect sort of thing. It's very difficult to get off of the Salesforce ecosystem. And I think that they're making the right moves to make potentially a ridiculous amount of money going forward into the future. Now, last off, we have Vichi, ticker symbol Vichi. Vichi is a triple net real estate investment trust that owns the most amount of real property in Las Vegas. So what does that mean, real property? So what I'm saying is that they own the physical properties of some of the biggest casinos on the Las Vegas Strip, but they don't own the right to run them as a casino. They just own the physical building. So the more valuable part is the right to run the casino, obviously. But those people need to pay Vichi rent. They need to also maintain the property and do everything with the property. So you as a Vichi shareholder just know that as long as they can cover rent, that's all the risk that you're taking on. So I really like those odds. I think that the house always wins in Vegas. And I think that Vichi is a good investment where you can kind of bet on the house being able to pay its rent and continue to exist. And then as Vichi pays you a huge dividend, they can also take their net income and buy more properties or pay off debts. So I think that Vichi is going to be a long-term buy. From me, anytime it goes under $30, I've said that I've been adding, does not matter. I will add a ridiculous amount if it goes sub 30, and I don't think we're ever going to see that again, though. It's currently paying me, I believe, $77 every quarter, or about $300 something a year. I think that it's a good company, and I think that long term it's going to go up and it's going to be worth more, especially if you want a business that, you know, is very safe and reliable, is going to pretty much go up in a very similar amount every year in a boring way, and pays you a very high percentage back in exchange for that. And as long as you're patient, I think that you can make good money off of Vichi. But then going to the Weeble account, you can see I'm up $12,070 on it, and that's from times before when, you know, I made a lot of money and I was trading a lot of money, and, you know, I got out of it for a bit because I needed the money at that time, and I was, you know, I wanted to pay cash for a car, and I don't regret it, but I could have made a lot more money is kind of what I'm getting at, but I still made a decent amount. Yeah, and I have this, you know, 8,900 that I kept in here that just, the sole purpose of it is just to pay me a monthly dividend, to throw it over to me and make my life a little bit easier. And I have that pretty much forever in my back pocket. And then if I get to a point where I have to liquidate things, I have this account that has been paying me for so long, and I can close it out and take all the money and pay for whatever I need. But I took my profits and I made them continue to work for me instead of just using up the cash or doing something else with it that wouldn't have been smart. I just had this money earning me more money in the background, and I've just been collecting the dividends and not trading it at all, not looking at the price, and not putting any new money in either, just collecting from this money that used to do me really well and used to really have a lot more in it, you know. So it's kind of just a reminder that you should set aside some of your profits to continue making you money for the long term, and I think that's a smart way to kind of look at it. The Microsoft also pays me like $4.15 a quarter, $4.15, and it's up 6.47%. I think if Microsoft really explodes, this would be the first thing I would want to sell. I would let you guys know, but I'm going to be very happy if I can sell this thing for like double the amount that I put into Microsoft or something like that. But as long as I don't need the money, I'm probably just going to keep them, because I think that Microsoft shares are going to just continue to appreciate in value, to be honest with you. I think that history has indicated that it's a big winner of a stock in a company, and I I don't see it getting smaller in the future. I think that people just refuse to buy it now, but eventually they're going to be having the fear of missing out. And I think that Microsoft is going to be hugely valuable. So let me know what you guys think. I'm very interested to hear your kind of opinions, what you think of my narration of my portfolio this week, if I kind of elaborated on things correctly, if I didn't say things the way you wanted to hear them, or if you think I'm wrong on something. I would love to debate it or talk about it and kind of just have a conversation with you guys. So leave some comments down in the comment section below so that I can improve my process, and I hope you have a great rest of your week. Thank you so much for watching. I really appreciate you. Bye.